Hey there, this is Ben from patternprofits.net. I wanted to do a quick video on the anatomy of a setup. I know a lot of you have questions regarding what exactly is a setup and how do we approach it. So this was on last week's weekly watch list. This is AVTR. And what we were looking at was this little cup pattern here. And the pivot or the high was 33.99. What I pointed out was how this inside little consolidation here set up the move to take out this pivot at 33.99. So the setup is just this little consolidation, and as it came out, it took out that 33.99 pivot. Now, if this should have rolled over to the downside and didn't come out to the upside, it never confirms. So anytime we have a setup, we are always looking for another action to take place that serves as confirmation of that setup, that it's an entry and it's ready to go. Let me give you another one. GNRC was also on the watch list last week. This is another one that worked. 364.09 was the pivot. If this doesn't take out 364.09, which is this high back here, on big volume, and this just stays below and drifts sideways, there is no actionable entry. The actionable entry is when it pushes through 364.09, the pivot, on big volume. That's when it's actionable. The setup itself, we're putting on the map because we want to keep an eye on it while it's in this area before it actually confirms an entry. Now, that's the simple version, but let's take a look at pool. Universally, on almost any setup, there are three areas to pay attention to. 449.44 is the high. That's the standard pivot. That's the one that we just discussed. A move through here on big volume, that's actionable. Always as close to pivot as possible, never extended more than 5% above. Alternate pivots, when you get a big volume day like this that takes out, this is called a descending trend line. DTL, you see that one that's in red there, trending down. When price moves above a descending trend line, sometimes we can use that as an alternate entry to try to get in before the crowd comes in at this pivot. So we call that a descending trend line break or a handle break. You'll see me refer to it often. So that's an alternate entry, more risk by entering down here, but also more reward, and you're in the driver's seat coming in early when it does go through the standard pivot. The other area is down here when we talk about VWAP pinch or the power earnings gap plays. This is a support area where price gets caught, where it's coming down and the anchored VWAP catches it. It goes inside or it reverses and starts coming back up. This again, more risky to take an entry down here at support, but also more reward. So this is your safest entry at the standard pivot, less reward, a little bit more reward if you're right on a descending trend line or handle break, significantly more risk trying to buy down in the base, but again, more reward. Now, all of these, we talk about these levels and how important they are because all of them act as levels to manage your risk against. So if you take it on the standard pivot on a move through here, your stop typically would be 7% max below here. If you take the descending trend line and it comes out, maybe you put your stop at the low of the day. If you take the anchored VWAP, which is acting as support, and you try to come in down here in anticipation of this breakout, you put your stop below on a close below the anchored VWAP. All of this is about managing risk. It's not about predicting what's going to happen. Oh, it's going to break out. It's about managing risk with tight stops. Let me show you for next week. Have one setting up. Crowd. This one setting up. It will definitely be on the watch list. 251.28 standard pivot. If this goes like this, down sideways, comes in, forms a handle, maybe it retests the center point of that, it's not really actionable unless it comes through that pivot of 251.28, or it comes back down to the volume shelf in this area or the cloud for one of those alternative entries like I mentioned. Maybe this forms a handle here, give you a little inside day as it comes out of that handle, breaks the descending trend line. Maybe it offers up an opportunity. But right now, all this is a setup to clear that 251.28 pivot. GNRC that we looked at just went right through, didn't form a handle. If that's the case, you weigh out the volume as it comes through there. Volume looks good, and so far it's looking good. As it comes through 251.28, that's confirmation, and that's actionable. Why we keep it tight is because this is what can happen. This looked good, came through the pivot of 52.45, good volume. So back here, you're thinking you're in great shape, made a little progress on day two, and then completely rolled over. If you got in here tight, 52.45 pivot, as this rolls over, you get stopped out with a small loss. Or even if your stop was down here, regardless, you got out with a small loss because you took it where you're supposed to as it came through resistance with your stop just below. This is why we use these levels to manage risk. It wasn't because we knew the breakout was coming. It's because if it did fail, the risk was tight and the stop was nearby. One more we'll take a look at, kind of put everything together. Futu. You'll often hear me talk about VWAP pinch. You have multiple levels of pivots above, as we've discussed. When you have a pinch like this, the support comes from the anchored VWAP off of the low. Risky to take as an entry here, but more reward if it turns out to be the bottom and you're right. The same over here. If you took this as an entry as it reclaimed anchored VWAP, it was very risky because it could have just rolled back over. But if you use a tight stop as it came through, that's an actionable point. As we take out the top of the VWAP pinch, come through, this is also an actionable area as we take out anchored VWAP to the upside. We manage our risk and place our stop nearby, maybe on this low, maybe on this low. For some, maybe it's even back here. But we are managing our risk tightly in one of two spots with this, either at support or through resistance. It is all about managing risk, not because of a prediction or what we think may happen. Now, if you took it back here, you're really in great shape and in good position to take out this descending trend line and then eventually these pivots. So the safest place on this, if you're watching Futu, is usually through one of these pivots. This 204.25, as this makes its way up here, maybe pulls back and forms a handle, blue skies above, that's actually the safest entry and where most of the Can Slim crowd and the William O'Neill, the traditional type of entry, that happens way up here in this area. This is more for advanced techniques, using pocket pivots, using anchored VWAP, using the 50-day moving average I use as clouds. These are all more advanced techniques to get you in. But a setup is just that. It's a setup. Something actionable has to occur for it to confirm and to be actionable for an entry and then a tight stop placed just below. Hope this helps and makes some sense. I will see you guys over on FinTwit.